What is going on, everybody? And in this video, we're providing a state of the market and stock picks for October 14th, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day in the week ahead in this glorious market. So today was the big day. Yeah, it wasn't Wednesday, it was today. My bad. Nonetheless, here we are. Got the core CPI coming in at 8.2, expecting an 8.1. So above a little bit of what they were expecting, but this led us to an interesting open. We essentially gapped down on those numbers because of the fact that three historic the triple threat of 75-point basis moves has hardly even moved inflation. Hardly. Being said, things are going to get worse in Q4. We have to understand that. Things seasonal wise, the demand is still going to get worse. We haven't even really introduced any of the demand that came in from the hurricanes and the damage that's done. We'll see that in the next, more so in the next core report, as opposed to this one. So being said, I think the next core inflation report is going to be massive. But being said, we do have monetary policy before then. We have monetary policy essentially coming out on the 2nd of November. So looking at that and looking at what the next move is, you may be asking yourself, well, if we had 8.2 markets, why did we rock it today? The thing is something I've been talking about. Yes, there's been a lot of buying around this area, but that does not take us out of the fact that we're still in the thick of things. My thesis for the market is still very bearish. It's going to take a lot for me to think that we're just going to completely pivot and start heading for all-time highs. This isn't your typical market, your typical cycle. It's not just going to flip and start running back to all-time highs. You are going through a recession, and this is a recession. It's very choppy, and you get a little bit of hopium introduced, and the market rockets. And essentially, that's what happened. You had the inflation report. The market just fell off, and then all of a sudden picked back up and started running back up. Now, technical-wise, again, you had the break. This is the first real flush we saw today, and then it just gathered steam and started shooting up. We are in earnings mode, and we haven't even had earnings yet. We were just starting earnings, to be honest. So with all that being said, you have to be mindful that something that's very important going on in Europe right now. The Bank of England is dealing with a date tomorrow. Essentially, they said tomorrow they're going to stop purchasing rates or start purchasing bonds. They have been manipulating their bond market heavily, which in turn manipulates our bond market extremely heavily. That being said, they're supposed to stop tomorrow. What is that going to mean? The only reason they started buying bonds is because if they did not, their financial system would have crumbled 2 weeks ago. And I'm talking about crumble, like mortgage loans, pensions, all that jazz, were completely obliterated. And somehow they managed to pull money out to try to cover this. Again, short term, that's great. Long term, that is definitely not good. We see what happens in the U.S. after printing so much money in 2 years. What happens? Or you get a year like this, and it's still not even the worst it could potentially get. That's not saying I haven't started buying. I have started buying, but I'm very cautious about what's currently going on. Again, we are in earnings mode, but once earnings starts getting out there, if earnings start getting really bad, the market's not going to run up. Earnings are very pivotal as well. You have to understand that. It's not saying we're going to crash off our earnings, but we could definitely take another big dive before even heading back up. So that's something you really have to keep in mind here in how things are starting to unfold over the next 3 weeks. As I was saying, earnings is completely done after 3 weeks, but after big tech, things kind of really slow down. The market really doesn't care after that point. They want to know what the big boys are doing and what's going on with them, essentially, in these next 3 weeks. So, and that being said, We have to see how we open tomorrow. The whole thing with England, we'll know tomorrow what's going on with them, if they're going to stop buying bonds. If they stop and the market starts to sell off, that's something you have to keep in mind. Things can get really nasty if that happens. And you'll see just how much of an impact uh, the Bank of England's bond purchases has on our market. And I realize that the whole Europe and they're small, whatever the case is, but they affect us a lot, right? And essentially, Europe has crashed the market alone, just on what they're currently doing right now. They did that a couple of years back, and they did the same thing, and the market crashed. Just so you're aware, you got reference. Again, nothing's the same, but it has happened in the past. So being said, what we're doing now, you have to play day by day. We're going to need a very strong tech to push us up tomorrow. If tech isn't strong tomorrow, it's going to be very unlikely that we can continue up. We have to also look at banks. Banks look like complete garbage when I bring them up. They look like they're just retesting it and waiting for the next dump. You have to understand that's the kind of market we're in. Again, there's been a lot of selling pressure. And then you had some people come on as well. I think it was Janet Yellen came on and talk about, our Fed member came on and talk about a soft landing. Then you had essentially had JPM CEO come on and saying there's no such thing as a soft landing in this market. So that's forewarning you that you're going to get some really nasty earnings coming up here. So being said, technical wise, again, we had that massive dump down to the 34.87 today. I mean, it literally opened up here at the 35.79 and dumped almost 100 points straight out the gate, and then turned around and ran almost 200 points out the gate, which is absolutely absurd. Again, this is the kind of market you're dealing with. Yeah, it's great to see movement like this, but the big thing is to understand that it's heavily manipulated with the bond purchasing and everything. It's very indecisive, and this isn't a great market to really be in, to be honest, because of the indecisiveness. You get maybe 1-2 days, and then that's it. Maybe same just like this, how we had the 1-2 day hopium, and then we crashed. Maybe we get another 1-2 day hopium, we get up to 3,800, and then jump, and then dive off. It really just depends on how things continue to play out, especially earnings here. Again, monetary policy is going to be an issue. I think a 100-point basis move is very much on the table. If you're barely making a dent in inflation and you run another 75-point basis move, you might be able to bring it under 8 this time. You might not. You might need another 75-point basis move. Or you got 2 more before the end of the year. Maybe you hit it with 100 and then another 75. So you really have to see how it's going to work. You have to understand that it's just getting more and more impossible for anybody to even afford purchasing a home. So if you lose your job, you can't sell, liquidate your home, you're going to go bankrupt. This is something I was talking about. And so this is something that is going to take time. And you have to realize this as more and more people lose their jobs and can't liquidate their homes, liquidate their assets, which is happening. Right? It's going to be a while, right? That people aren't just going to be kicked out for not making the first payment. It will be a while, and banks would rather get paid than kick you out of the house. So nonetheless, you're going to see a lot of foreclosures here in the next couple of months. And again, it's all about timing, right? And we may push up at some point here. I was talking about this a lot, that we'd get a big spike like this. I wasn't expecting it about an hour into the market and then this thing flip up like that, but nonetheless, it did. So being said, now we'll have to see what's going into the next couple of days here. But tomorrow, I think, will be big. Tomorrow will be very pivotal if we can break above here, if we can hold above the 36.82, and we get some positive sentiment, mainly tech. If tech could get some strength, I think we can really start pushing here. But we definitely have to see there. And depends on what's going on with the Bank of England. Now, Bitcoin, again, it broke just like the market did, and then wicked right back up. Until the market actually breaks, Bitcoin will not break. If market does break and actually start selling, Bitcoin will actually break and start selling. That's pretty much where I am with Bitcoin. It's to the T what the market is right now, and that just means that there's a lot of fear in the market and everything looks the same. Tesla got a clean break. Could very much be a retest before the next leg down. Looking at support roughly around that 200. So we're gonna have to see. It could be a retest tomorrow. If Tesla can't break back above this 221 tomorrow, Tesla could be in trouble. It has nice room to run, at least back up to the 254. Strong possibility that could happen. If that does happen, that would be great for Tesla. Then we can keep moving forward. I am in this. I didn't grab it at the bottom though. I did enter down this towards, I think it was around 117, 217 to 18. And then I had a really obviously loose stop here on this one. Because I know it's made these Tesla is a safe haven in this massive spike down. It's going to push up at some point here very shortly, in my opinion. And I took this for a longer swing, so looking for this. And as this makes its way up, I'll start tightening that stop on its way up as well, in case it does want to do one of these and jerk back and then tag me out and then take off. But we'll see. We are in earnings mode, so that's what I'm kind of looking for with Tesla. So really watching this level. Again, the 222, hopefully we can get above that tomorrow. If Tesla can really start ripping, I think this thing could potentially get pretty high, 240 and potentially 252. Maybe not 252 tomorrow, but maybe. It really just depends. It's a safe haven. A lot of people will flock to it. But on the same token, if it does come back below the 217, I think Tesla's in trouble. Could potentially sell off to get even more damage there. BA break of the retest. We're going to see if this thing flops over. If it flops over between 132, I think it can sell back down to the 121. So again, value's been pretty choppy. Value really hasn't done much, to be honest, over these past couple of weeks with everything going on. Not much of the market hasn't. It's been very choppy. But this was a big mover, is what the bank is doing. And if the CEO of JPM is telling the truth that there is no such thing as a soft landing, that means his earnings could be pretty nasty, and you might actually see this thing again down by 90. You have the break of the 20 EMA, and this is a retest. If this thing can't hold above 108, this thing again could start seeing a lower low here. Again, potentially aiming for that roughly around that $90 mark. Again, really just depending on earnings is, and earnings is tomorrow in the morning. So we'll see how JPM does. Again, if JPM does really bad, this thing could blow off, and it could be it for tomorrow. It could be the last thing. You have to, again, realize that the banks hold a lot of weight. If they do very poorly, we're going to be in trouble. And then 218, so JS is next week. Bank of America, looks like it is tomorrow. No, it's next week as well. So we do have JPM. So JPM is going to lead us off. We'll see what they go from there. Visa is next week as well. This is definitely one. I don't typically play Visa, but I really want to see what their report is. Something, if you've been following me, I've been talking about Visa. I want to see how credit cards are doing. Obviously, we'll get that from JPM as well, but I want to see Visa, like what is going on with them as far as how much growth they're going to get on this earnings statement, because I think a lot of people are dipping heavy into credit, and so kind of concerning where that could potentially be going. So want to watch that. But that's pretty much what I got. It's a Friday. We have to really watch and see what the market does. Again, I don't think people are going to want to hold over the weekend, especially out of a pop like that. We could potentially get a run, but I think it's really going to matter on what happens with the Bank of England, what happens with JPM. If JPM comes out with some really horrible stuff, that's just going to cause us to sell off. If the asset purchasing that Bank of England is doing lays off, and then their bonds start to fall, and their pound starts to fall, you're going to see that reflected in our markets. As our bonds start to fall, it's going to pull the market down. Again, with the bonds, it really doesn't matter if it goes up or down. Slowly, if there's volatility in the bonds, it will affect the market in general. The bonds in the market can inverse, they can run in parallel, they can do whatever. We have to understand the bonds really don't affect the market until there's massive volatility in the bonds. When there's massive volatility in the bonds, it will push the market one way or the other. So you have to be mindful of that. And if the bonds stop buying and the pound flushes and the bonds flush, our bonds flush because they are directly affected, and then they'll burn down the market and we'll come right back down to where we're at. So tomorrow's going to be a very interesting day, a very pivotal day. I think now that we got the very pivotal event out of the way, now it's just there's the sensitive of earnings in some of these other events that are going on. Again, the Bank of England thing is a black swan. If something bad happens in that financial system, gets crushed, it's going to affect us, right? We have to realize we trade with everybody. We're not just by ourselves, right? The world is going to affect us. You can try to avoid the world, but again, it's going to have an impact on our economy in our markets in the same. So with all that being said, I appreciate you. Go ahead and drop a like button. Until next time, I'll see you guys later.